Okay, now we continue with the cash flow concepts. The first concept that we have is cash items. I've already explained what cash items are, and cash items are the only things that we record in the cash flow statement. It refers to money, funds available to be used by the business. It is the most liquid component of the current asset. Okay, and then we also have got non-cash items. These are expenses that do not involve a cash receipt or payment, but listed as an income or expenses in an expense on the financial statement, such as depreciation, bad debts, discount received. All these we consider them to be non-cash items. Why? There is no receipt or payment. They do not involve any receipt and payment. And non-cash items are not to be recorded in the cash flow statement. We also have got the inflow of cash. Okay, inflow is simply means money or cash generated by the business or money coming in, expressed as receipts such as capital, a loan that has been taken from the bank or from sales and debtors, all money that is being received. Okay, we call that inflow of cash. Outflow of cash, that is money going out, money or cash used by the business expressed as payments such as buying assets, paying the loan, and paying expenses. Those are outflows of cash. Financial period, okay, reporting period, usually a 12-month period. Periodic reporting during the financial year is also conducted by some businesses in an effort to assess progress. A financial year that we'll be looking at in grade 12 anyway is actually 12 months. What are debts? Debts are liabilities, amounts owing, could be of long-term nature, non-current liability, or short-term current liability. Okay, those are debts. We can have loans, we can have mortgage bonds, we can also even have creditors, bank overdrafts. All those are debts. Average share price. Okay, shares are issued at different prices, which we call the issue price during the existence of the business. The average share price would take into account the total share capital plus divided by the number of shares at a specific point in time. So it's the total share capital divided by the number of shares at a specific point in time. That is the average share price. We usually consider the average share price when we are calculating the repurchase of shares. Net working capital. Okay, working capital is actually comprised of current assets and current liabilities. Okay, dividends, we know that this is compensation that is given to the shareholders for the money or the capital that they invested in companies. Provisional tax is cash payment to SARS in respect of income tax that must be paid after the net profit is calculated. Statement of financial position. Of course, this is a financial statement well known as the balance sheet. And then we also have got the comprehensive income statement of comprehensive income, well known as the income statement. And lastly, we've got the annual report. The annual report, of course, the report that the directors would present at the annual general meeting at the AGM of the shareholders. It will include the directors' report, the independent audit report, and the financial statements. The financial statements, we've got the income statement, the balance sheet, and the cash flow statement. Okay. Alright, so these are the key concepts that we'll always be using as we deal with the cash flow statement. Thank you.